Hello students, I am CA Sudhani and I am continuing with this lecture on consignment, which is the part of your paper 1, Principles and Practice of Accounting, and this is in continuation with the previous part. So friends, as I told you in the last part that I am going to summarize you all the transactions related to consignment account by showing you a ledger of consignment account. So here it is. This is the consignment account, the ledger having debit side and credit side as usual. So this side, the first side is the debit side, and on the right side you can see is the credit side. The first entry here is on the debit side, to goods sent on consignment account. So this is for what? I think you have identified it. This is for goods sent by consigner to the consignee's place, right? Okay. So in our example, we had taken goods sent to rupees 200. Let me write it. Okay. Next, the second entry on the debit side is to cash account. Can you recognize for what is it? This entry is for consignor's own expenses. Consignor's own expenses. Okay. I think that we had taken consignor's expenses to be rupees 20, I think. Let me confirm it. No, it was something else. It was actually, as we can see here, it was actually rupees 15. Okay, so what amount should I write here? Then I should write here 15. Okay. Next is to consignee's account. Now, why is consignee's account credited? It can be credited for multiple reasons. You can see here 3 times the consignee's account has been credited, and we know the reason for these 3 entries. The first reason can be for consignee's expenses. For consignee's expenses, the consignee is made our creditor, and the amount that we had taken is rupees 20. Next, it may be for bad debts, and when bad debts will be credited by the consignor in consignment account, when the bad debts are to be borne by consignor himself. That means when no del creditor commission has been given. So in that case, again, consignee's account will be credited. Okay, what was the amount of bad debts? As we can see here, it is rupees 10. So let me write here rupees 10. Okay. Next, once again, as we can see, consignee's account is credited. This time for consignee's commission. And what is the amount of consignee's commission? Rupees 15. So let me write here rupees 15. Okay. Under this entry, you can see 2 stock reserves, but just now please leave it. Now let us move on to the credit side. Looking at the credit side, consignee's account is first of all debited. By what thing is the consignee's account debited? When will we make consignee our debtor? We'll make consignee our debtor by the amount of sale proceeds that he has received. As we already know that he has received sale proceeds of rupees 100 in our example. So what the consignor will say? He will say that you will have to return me these 100 rupees. So the consignee becomes the debtor. Okay, that's why he has been debited. And finally, on the credit side is written by stock account. So this is obviously the consignment stock, closing stock of consignment. And as we had assumed that the closing stock of consignment is rupees 170, so let me write it here. Rupees 170. Okay. Now at this stage, again you can see under the stock entry a new entry known as by goods sent on consignment account. But again I will say right now please leave it. Now just looking at all these entries in the ledger, let us make the final conclusion, let me calculate with the help of calculator the total amount lying on the credit side. As we can see, is the total amount on the credit side is 100 plus 170, and on the debit side we can see many amounts. First of all, rupees 200, let me deduct it, then rupees 15, then 20, then 10, and finally 15 rupees. So what I have calculated is that we are left with rupees 10, which is the profit. This is the profit on consignment, right? Had the amount been negative, then we would have written that amount on the credit side, and that would have been the loss on consignment. But right now, as we know that this is not the case, so we are having the profit of rupees 10, which is the profit on consignment. Is it clear to you? Have you understood the summary of the consignment account? I think yes, and I think you have also understood how consignment account leads us to the profit or loss. Okay. Now one thing is remaining, the two extra entries in blue that you can see. Okay, so let me clarify it. But before understanding these two entries, we'll have to understand a different concept. So first of all, let us clarify that concept. So this is that concept. Let us understand it. Suppose X, who is our consignor, sends the goods to Y. Let us say the goods are of cost rupees 200, but this time he doesn't send the goods to Y at cost. Rather, he sends the goods to Y at cost plus, say, 20%. This is just an example. It may be 30%, 40%, anything. That means he is sending the goods at cost rupees 200 plus 20% of 200. That means rupees 40. In all, he is sending the goods at rupees 240. I mean to say that when X prepares the pro forma invoice, the pro forma invoice is raised at rupees 240 rather than rupees 200. Is it okay? So this may also be possible, that the pro forma invoice is not made at the actual cost to consignor, rather it is made at the value above the cost. This value is called invoice price. This value is called what? Invoice price. Right. Now Y will have to sell the goods keeping in view this invoice price. That means now Y will not say that I am selling the goods of rupees 200. Rather, he will understand that I am selling the goods of rupees 240 to the buyers. Okay. So now the invoice price becomes base for Mr. Y, that is the consignee, right? Now this invoice price system has effect on two cases. On two situations this has the effect. The first effect is that when the entry for goods sent is passed, when X sent goods to Y, what entry would have been passed is consignment account debit to, I mean writing in short form, goods sent on consignment. By what amount that entry would have been passed? It would have been passed by rupees 240. But we know that in actual situation, the goods are not of rupees 240. X knows it, consignor knows it, that actually this value is not 240 for me, it is just rupees 200 for me. So, although the entry has been passed by rupees 240, but the amount of loading will have to be removed. Now, what is this loading? The extra rupees 40 that have been added to the cost. This is called loading. So, although the first entry has been passed by rupees 240, the amount written in this entry is rupees 240 and it will be rupees 240 always. But X will in the next entry reverse this loading value, and for this he'll have to pass the entry for reversal. Entry for reversal. What will be the entry for reversal of loading? For removal of loading, what entry will be passed? A reverse entry will be passed. Goods sent on consignment account debit to consignment account rupees 40. This way, the 40 rupees loading which was included in the amount of rupees 240 has now been removed. How it has been removed? By passing a reverse entry. Okay, this is the first impact. Let me tell you the second effect. Just tell me, friends, that what entry is passed for closing stock? The entry for stock is closing stock account debit. Let us say at the end of the period, Y has closing stock of rupees 120 with him. So the entry is closing stock account debit to consignment account. Now just tell me, friends, X knows that rupees 120 is not the actual value of stock, because this value is once again the invoice price value. This is the value at invoice price. This is what X knows. So what X will do? He will once again want to remove the effect of loading from it. How the effect of loading will be removed? Before that, answer me, what is the amount of loading included in this rupees 120? We know that this 120 is actually 120%. Am I right? Because what we do is we charge the invoice price at cost plus 20%, which is in fact 120% of the cost. So I can say that this 120 is actually related to 120%. So how much will be related to 100%? Rupees 20 will be the amount of loading. So this is the extra amount included in this amount, right? So X will have to reverse it. X will have to remove its effect. How will he remove its effect? By passing a reverse entry. But this time the reverse entry will not be just the reverse of above entry. It will be something different. Now just notice what entry will be passed. This time consignment account will be debited. Obviously it is going to be debited because earlier it was credited by rupees 120. This time it will be debited by rupees 20, so that the effect of loading is removed. And what will be credited? A separate account will be opened for it, which is called the stock reserve account. This stock reserve account will be credited by rupees 20. Is it okay? Have you understood this system? So I have told you two things. First thing is that these two transactions, this one and this one, these two transactions will be first of all recorded at the invoice price value, right? Because every transaction is going to be recorded at invoice price. So these two transactions will also be recorded at invoice price value. But later on, the effect of loading will be removed from both these transactions. And how to remove loading? For removing loading, we pass some specific entries. As I am highlighting, these are the two entries, right? Okay. Now let us once again see the consignment account. And now let us see what these two extra entries are. I think now you will better understand it. Just see, friends. For what this entry is being passed? Can you tell me? This is actually the reversal of loading. This is the removal of loading. Out of what? Out of this amount. Let us say, suppose in this situation, the amount would have been 240 then what would we have done? We would have removed the effect of loading by rupees 40. This way, the amount would have been effectively rupees 200. That means 240 minus rupees 40. It would have been once again arrived at rupees 200. Okay. Similarly, what is this? Can you identify what is this? This is again the removal of loading. Removal of loading from what? Can you tell me? Removal of loading from what? This time the loading has been removed from stock. Now suppose this amount would have been rupees 120. So the amount of loading of rupees 20 would have been removed by passing this entry. What entry? Consignment account debit to stock reserve account. So this is the complete format of consignment account. I hope it is clear to you. Now what remains is a few more entries on the part of consignor. Let us see what those entries are. So here you can see other entries in the books of consignor. The entry that we are going to see first of all is entry for advance received from consignee. So as I had already told you that many a times it happens, in fact I would say that in all the cases this happens, that consignor asks from consignee to put some amount with him, which is called the advance money deposited. For that, what entry will be passed by consignor? He has received cash or bank. That's why cash or bank account will be debited. And what will be credited? Can you tell me what will be credited? Consignee's account will be credited. Because this advance money received will be treated as a kind of liability for consignor. Because this is not actually the amount which belongs to consignor. This is just an advance. It will be later on adjusted. That is why this is treated as a liability right now for the consignor. Okay. That's why consignee's account is being credited, because it is a liability. Okay. In our example, the advance money is of rupees 5. So let me pass this entry by rupees 5. And the last entry is for cash received as settlement. How much cash will Y pay to X? Can you tell me? Looking at this account sales? Yes, you can say that Y will remit rupees 50 to Mr. X, that is the consignor, because after deducting all the expenses, he is left with rupees 50. Okay. So what entry will be passed by consignor for it? First of all, he has received some amount. That's why bank or cash account will be debited. Okay. And remember, earlier we had debited consignee. Do you remember that consignor had debited consignee for rupees 100 sale proceeds? That means consignor was saying to consignee that I want rupees 100 from you. And finally, consignee has paid that amount, not rupees 100 in full, because he has deducted some expenses for him, but he has paid rupees 50 to consignor. That's why now his account will be reversed. Consignee's account will now be credited by rupees 50. That is the amount which he has remitted. So these are the entries to be passed in the books of consignor, right? Okay. So friends, after looking at the consignor's consignment account and two more entries, now I am going to present in front of you the consignee's account. This consignee's account is basically what? This is just the account which is showing account sales. I can say in other words, this is actually a picture of account sales. As we can see here, that first of all, when in the account sales proceeds of rupees 100 are shown, the same amount will be shown in consignee's account on the debit side, because we know that the sale proceeds that consignee collects from the customers rupees 100, by that amount the consignor will debit him. Okay, because he then becomes the debtor. That's why consignee's account will be debited by rupees 100. The entry will be consignee's account debit to consignment account. Secondly, all the expenses which consignee has incurred and which he wants consignor to bear, all those accounts, all those expenses will also be shown here. And by all those amounts, the consignee's account will be credited. As I've already told you that these expenses are to be ultimately borne by whom? The consignor. That's why consignee's account is credited this time by consignee's expense. Firstly, let's write rupees 20, which is consignee's expense in our example. Secondly, it will be credited by the bad debts, and bad debts, when it will be shown? Only when they are to be borne by consignor. That means when DIAL creditor commission is not given. Bad debts in our example is rupees 10. Thirdly, this account, consignee's account, will now be credited. That means consignee will be made creditor by the amount of rupees 15, which is the commission to be paid to the consignee. Next, we know that consignee had also deposited advance money earlier, advance money of rupees 5. So he will be credited by that amount. And lastly, the amount which he has remitted, that is rupees 50, as we can see here in the account sales, that amount will also be placed on the credit side of consignee's account. So what we, as a consignor, what I have to take from consignee, all those things are shown on the debit side, and what I have to give to the consignee, that will be shown on the credit side. I think we have understood everything in detail. So that is the end of how accounting is done in the books of consignor. Thank you, friends.